What's going on, everybody? Welcome back to the channel. I appreciate you stopping by, spending a few minutes of your time here with me tonight. Tonight I want to talk to you about powerful patterns that you can learn to identify on lower time frames, and understand them better when you're looking at a higher time frame, okay? M's and W's. These M's and W's oftentimes form the wicks of very important candles in very important timing windows. We're going to see these patterns at the top of the hour, at the bottom of the hour, going into the New York opening window or the London opening window. Today we're going to look at an example of last Friday on the US dollar and Mexican peso pair, a 13.5-cent drop in price going into the New York Open, okay? So first, let's look at the bigger picture of the day, all right? Right here, we're looking at an hour chart, and you can see that blue vertical line all the way on the left. That is where the day started. That red dotted line, that is Thursday's closing price, all right? You can see that the day opened and Asia traded higher, pulled back into the London Open. London traded higher before giving a substantial drop in price that brings us below closing price. We get a close beneath closing price, right? Now, right after that move, you can see that green candle that has large wicks on both sides, all right? But take special note of that upper wick on that candle and closing price. You see how that wick just barely pokes through the previous day's closing price, right? And in here is our trade. In here is our pattern, right at the top of the hour, okay? So let's zoom in and take a closer look. So here we're looking at the 1 minute time frame, all right? And you can see the time of the day down here, right on the bottom of that chart. You can see that all the way on the left, there's a big bullish candle, all right? A big bullish candle right at 8:30, okay? This market, right, we have the bond market open at 8:30. That's an important time. So we look at 8:30, boom, right? It has that big move up followed by this drop off, all right? That 8:30 candle, look at how it just barely wicks closing price, all right? And if you were trying to get in right at 8:30, you would have been in the market early, right? You would have got shaken out because you can see maybe you would have got in right there. You would have put a stop loss above that wick at closing price maybe, right? And then just a little while later, we trade back up and we trade above closing price, all right? So now look at the next time that shows up, 9 o'clock. You can see that vertical line, gray line that shows you where 9 o'clock closes, right? And what has happened here is that the last 15 minutes of the hour, so we have 8:30, and then right there, up there at the top, we have 15 minutes from 8:45 to 9 o'clock. That's that price action that's right there. And if you look at the first 5 minutes of that bit of price action that goes up above closing price, look at what it does up there. It's like a consolidation, right? A very, very tiny little consolidation right above closing price before it breaks to the downside, right? We get a very large pair of candles that engulf a lot of that price action, right? And fall back beneath closing price and give a close. That's what's important. After that bit of consolidation, we get those engulfing candles that close below closing price again, then price pulls back. Because look at what happened. We had that consolidation, that tiny bit of consolidation above closing price. What is that consolidation? It's a trading range. It's hard to imagine it, but if you could zoom in on a 5-second chart, that would be a magnificent trading range. And there would be M's inside of that, right? So if that's a trading range, that candle that breaks below and closes below closing price, that's the breakout. That's the breakout of that trading range. And we don't trade the breakouts, right? You're not trying to catch or predict the initial breakout. You're trying to wait for the initial breakout. So that right there on a very small time frame is the initial breakout. And then we get a pullback. And that's what we're waiting to see, that pullback, okay? That pullback is occurring at like 8:57, 8:58, 8:59, price drops again. 9 o'clock gives a close beneath that entire pullback, that little tiny consolidation, which occurs after that initial breakout of that consolidation above closing price. All right. And so that is happening. There's all of the confirmation that we need to take a trade. And you have to remember that when I take this trade, I'm trading on a 1-minute time frame. Okay. I am trying to get in and get out. This is a scalp for me. This is all I'm going to need out of the session. If I nail this and snag a 13.5 cent price drop in, 15 minutes, 30 minutes, I'm okay with that. And I'm done because I want to go enjoy the rest of my day, or I want to go get ready for work and leave for the day. You know what I'm saying? This is the type of trade that I like to take on a regular basis. This type of trade is going to happen every week, but really every day if you're looking through the market and you know exactly what you're looking for. Like, look how pretty this is, going up and giving that consolidation above closing price like that, and then breaking down right into 9 o'clock, and then really breaking down going into the session, right? It's beautiful. Now look, here's the position. And the first thing I want you to notice is the exit. All right, look at the exit. It's not like I got out right at the bottom of this. You know what I'm saying? If I could have let it ride longer, I would have let it ride longer. But I know that I'm trading on a 1-minute time frame. As soon as I see a sign of weakness, then I'm getting out. Until then, I'm not really getting out. And for me, a sign of weakness, you can see that I have that right there where price traded into. I had that marked off on a much higher time frame as a significant level, right? And price traded into that. When it did, it engulfed on this 1-minute time frame, okay? Which I know an engulfment is a W pattern, okay, at the low of the day. So as soon as I see that and it goes up and closes above that, I'm like, okay, I'm thinking about getting out. And it keeps going with momentum. I'm like, all right, I'm out. Because I know that nobody gets a free lunch. You have to be able to get out of the market. Don't be afraid to take profit. If you can nail something like this consistently, you know what I'm saying? Over time, you'll be able to size up these trades and you can make whatever you want to make off of these. And these happen very consistently, these types of trades, okay? And the most important thing is execution. So what I did, a demo account, $50, 0.01 lot size, keep all of my losers beneath $2, beneath $1.50 if I can. Just try to stay alive and try to execute these trades and get used to putting trades in and getting out of trades quickly and just see what's possible. You know what I'm saying? But you have to get used to execution, right? And you'll see, like if I would have stayed in that, I would have given the majority of the profits back. But as this trade stands, it's like a 1 to 1.65, I think, risk to reward. And you can see that's with a pretty liberal stop loss above closing price, well above closing price, well above that consolidation. Price should not go back up there, because that little bit of consolidation in there is like, it's traders who are trapped up there. This is what STACEY Burke talks about as trap volume. It's a pattern within a pattern. It's a very small rectangle inside of a larger rectangle pattern, right? And that's what I'm looking for. That's what I'm showing you, okay, in a simpler way, or something like this. But this is on the 1 minute chart. Now, if we zoom out and look at like the hour chart, you'll see just how small this trade is. But this is actually all you will need to get used to, right? This kind of thing. If you're like me, I don't like to be at the computer very long. I don't want to be in the market very long. If I can secure a win like this in 20 minutes, 25 minutes, I'm good for the rest of the day and tomorrow. You understand what I'm saying? Maybe the next day too. I'm trying to stay alive. If I take a trade like this and I add on 5% to my account, I'm fine, dude. I'm good. I know that with consistent results, I can size up. I can size up on a regular basis as my account goes up, and then I can start paying myself. You understand what I'm saying? So let's look at the hour chart though. So here's the hour chart, and you can see that same position on there, that same square rectangle that we put on there, and you can see that wick that wicked through closing price that we looked at when we were looking at the entire day on the first slide, right? And you know what I'm saying, I ain't trying to brag, but look at that level I had painted on there, how perfect price played off of it, you know what I'm saying? But I just want you to see and put this into perspective, that this is all it is out of the entire day. This could be it for the week. You could catch one picture perfect trade like this on a smaller time frame like that. You know what I'm saying? With consistency, you'll be sizing up. You don't have to worry. This is a long process. Just chill. Get the consistency. You know what I'm saying? But anyway, I hope this helps you see something. I could go through, I'll pick these out every day, every week, whatever y'all want. You know what I'm saying? I'll show you examples of this consistently, playing off of closing price like this. And you know what I mean? So anyway, until next time, I hope you continue to free your mind.